let's talk a little bit about you and Q2 and more, I guess more detailedly in terms of banking as a service. Like, let's talk about like, how do you define banking as a service? What's that all about?
Yeah, for sure. It's funny because I remember, what is it, 2 years ago, the first embedded conference that we
Yep.
did, and you asked the same question, right? And in a way, the answer is the
You're
same.
my
And in
go-to
another,
guy for that definition, by the way.
oh, yeah. I mean, at the end of the day, right, I think banking as a service is exposing the capabilities required to embed banking functionality inside of other products, right?
Mhm.
I think when we chatted in 2019, that was primarily exclusively in the context of these fintech companies, right, that were getting into the space, moving over from an adjacent vertical into banking. Today, that definition expands beyond that into technology companies and even non-financial brands, right, that are trying to solve more of their customers' problems. So I think that's how I'd still define banking as a service today.
So where I appreciate that, and yes, you were a speaker at our first embedded conference, and I think it'll continue to be given what you're working on. But so where are we in that sort of evolution? Can you take us through sort of where were we? You mentioned where we were in 2019. Let's talk about where we are today.
Yeah, 100%. Right. It's a question that I think we find ourselves asking ourselves pretty often, which is, 5 to 7 years ago, these bespoke banking products didn't really exist, right? The two types of banking products you had the ones where you go to a bank and you get a banking product. And then in some cases, you had these co-brand products, right? Where it was still the bank that was offering it, but you might have a logo here or a logo there. But ultimately, the fundamental product was the same. And so sometimes we find ourselves asking, well, what changed between then and now that lead us to a world in which you have an embedded conference talking about how people are embedding these services, right? I think it really came down to three things that changed. The first one was that, I mean, many of the speakers you have at this conference across all of the companies tomorrow, for example, including Q2, have helped democratize the ability to build these services, right? Kind of like we saw with cloud computing democratizing the ability to build a website, because now suddenly you don't have to do all of the hard stuff behind the scenes. Players like Q2 and others that are speaking at this conference have helped all kinds of companies just be able to use the tools inside of banking as opposed to accepting the products as a one size fits all. So that's the first one is making the capabilities available. The second one, which we've heard some speakers talk about today, is a new business model, right? Traditionally, for most banks, consumers are a cost of deposits, right? A way for you to get deposits to loan and service companies. And while there are banks that absolutely focus on the individual, in a lot of cases, the bank has to prioritize where it's making most of its revenue, right? With the advent of lower cost solutions and banking as a service, but also partnering with community banks and leveraging, the advanced interchange, we found this new business model, right? Where these companies can go and build something that serve a population that's been underserved because of how the business model worked before. So now suddenly you have this opportunity where a whole swath of people who, just because of the business model and the available capabilities, couldn't be served before, are now fair game, right? And so over the last 5 to 7 years, you've seen all of these new solutions going after different parts of that population. And you're lucky that you have so many different pieces of that ecosystem at this conference today. And then the third piece, just kind of focusing on those companies, I think the timing was also really good, right? Because these innovative companies, some of the ones that you have today and others that we've seen in the space, who most of the fintechs came out of that 2008 financial crisis, right? They picked one aspect of financial services, be it lending or investing or PFM or what have you, and they nailed that one thing, right? And that took, let's say, 5 to 7 years. But as they did that, their customers loved the experience and wanted more, right? So these companies were trying to move horizontal. But the interesting thing, and this kind of ties back to what we said at the beginning, is this evolution didn't happen all at once, right? I remember in the beginning, we would go to some of the largest companies in the country and we would say, hey, you should launch these custom banking products. Here are the problems that you can solve. Here's the value it will have. Some people looked at us like we were crazy, but other people would say, hey, this is an interesting idea. I need to see you prove it at scale in an adjacent industry, right? And so we and many of the other folks helping build embedded finance in this industry went to the ones that were closer to banking. So let's say the payments companies or the savings companies. So, we worked with the Capitals and the Squares, and then you expand beyond that to maybe micro investing, right? You look at someone like Acorns. You expand beyond that to wealth management and to PFM and to payroll. And what you started to see over the last 5 years is this almost these concentric circles, right? Where Once you prove out an adjacent industry,
Mm-hmm.
you keep going. And now that's leaving the orbit of finance, right? That's going into, and we'll talk about some of those industries that we're going into later. But as these industries have kind of proven out how you can take banking, combine it with what you already do to make something different, we're seeing the impact that can kind of have vertical to vertical. So I know that was a longer answer, but
no, that was a great explanation. And I'm imagining the concentric circles here. So what separates the winners from the losers? How does this play out in your mind?
Yeah, I think one of the really interesting things comparing ourselves against even 2 years ago is there's a lot more players on both the challenger side and the fintech side, but also on the platform side, right? I'll talk first about these guys, right? I think, and we've really thought about this because at Q2, our strategy is a little bit different, right? Our strategy isn't to go find one rinse and repeat use case and just do that over and over again, right? Our strategy is to look across each of the verticals, figure out who sort of has a competitive advantage and how can we use banking to increase that advantage to help them capture that vertical. And so as we've looked at the customers that we have and asked what makes them successful, we found that it comes to three things, right? The first one is differentiation, right? And one of the concepts that we've talked about in the past is this idea of like conceptual differentiation versus practical differentiation, right? Yeah. I'll give you an example. Conceptual differentiation is something that you add that is new and different, but that tomorrow someone else could go add, right? So for example, if I say, hey, every time you make a transaction, I'm going to donate 1 cent to this charity. If you're the first one to do it, that'll be unique and it'll be associated with you. But pretty soon, if it becomes a popular hook, anyone can go replicate that, right? You pick a charity and every time someone makes a transaction, you ledger 1 cent, right? And you settle at the end of the day. Then there is practical differentiation. And this is where I think the real meat is in the context of embedded finance, which is, okay, you're launching a bank account and a debit card. Get it. But how do you combine that with what you already do, right? To make something that you couldn't do without the sum of the parts.
Yeah.
And so there, where you've seen people in lending, people in PFM, people in payroll, use banking to change their fundamental product and offer something different, but something that's hard to replicate. That's one big piece of success. How do you stand out, and how do you stand out in a way that's sustainable over time? The second one, and I think we partnered on a piece on this one, but is focus, right? Everyone wants to be the next insert big company here, right? I want to be the next Chime. I want to be the next Square Cash. I want to be the next, you name it, right? The thing that made those companies successful and makes a lot of companies today in this space successful is focus, right? On a particular type of customer, on a particular type of problem, on a particular type of product hook. Because if you're designing for the average customer, you're designing for nobody, right? There is no average person, right? There are different people who have different traits and attributes. And picking a problem, picking an audience, and designing a product specifically for them has brought a lot of success. Whether that was folks like Robinhood who focused on trying to make, early investors, giving them the capabilities to trade, folks like Acorns who are helping brand new people entering the financial sphere manage their wealth, what have you, focus on one granular thing. And then finally, I think it's customer acquisition, right? And that breaks into two areas. There's the one that we think about, which is being efficient about marketing, being efficient about designing your product hooks in a way that will be kind of viral. But there's also the other piece that people don't think about as much, which is distribution channels, right? You can be a newer company, but if you have the right distribution channels and you can get your products in front of the users and your product is a focused product that solves for their specific problems, your propensity to succeed is much higher. So far, I'd say the differentiation, focus and the customer acquisition components are what we've seen as unifying themes between the folks that have been successful.
Great. I really appreciate that framework. You just mentioned some new industries, right? So I know in 2019 we were really very much focused on challenger banking and that type of sort of model. But as you describe now, like we're seeing financial products in all sorts of ancillary industries. So let's talk about a few of them that you're seeing.
Yeah, 100%. I'm going to split them into two categories. One will be fintech verticals that haven't launched this yet, but you're going to see them coming. And then the second category will be brands, technology companies, et cetera, who are maybe outside of the traditional realm of financial companies. So in the context of financial companies, I'll give you 3 examples that I think you're going to start seeing a lot more of. And I'll kind of help you see when they add banking, what is the unique thing they can do, right? Because it's one thing to be like, yeah, they can add bank accounts and debit cards, but your first thought is going to be like, why? Why would any of them launch that? So let's dive into that. So 3 examples I'll give you. One will be insurance, right? So think home insurance, for example. The second one will be loyalty and rewards type platforms, which I think at Tearsheet you guys have spoken about a little bit, right? And the third one will be lending and sort of these BNPL type platforms, right? So in the context of insurance, again, it's not just about adding the account and a card, right? Imagine if instead of the traditional process where, let's say, your house gets flooded and you need to go get your disbursement to go buy their replacements. Well, today you're spending a week and a half applying, sending forms back and forth, then another week and a half waiting for the funds to come over, and they're going to send it over ACH, and then you're going to try or into a prepaid card, and you're going to go try and transact, right? The net is you've waited 2 to 3 weeks while your house was totally destroyed, right? And the insurance company hasn't gotten any incremental value out of your disbursement. Let's paint a different world. What if my house gets destroyed? I really hope this doesn't happen. I need this house. Yeah, but let's say the house gets destroyed, right? And I apply on my, put all the details on my phone, I take pictures, et cetera, and I send it over, and my application's approved. Well, now I can spin up an instant virtual card. I can disperse the funds that you're owed directly onto that card instantly. And guess what? And this is the kicker. When you go and you spend that money, because you have to, right? Like in this world, my table's destroyed, my bed's destroyed. When I go buy those things, the insurance company is earning interchange, right? So just imagine for a second, let's make a number up. Let's say it's 1% total in interchange that they're going to be earning back. If I disperse $10,000 to you, I am now earning $100 that I wasn't earning before, right? Now, one way of looking at that is, hey, that's incremental revenue that's really going to help grow the business. Another way of looking at that, particularly if you're an insurance company, what is the number one thing that an insurance company wants to lower? The loss ratio. How many people are actually calling on their insurance claims that they have to go pay out, right? So if every time you're dispersing to someone who has this bank account, you're earning 1% back, it's effectively lowering your loss ratio by 1%, right? From a financial perspective. And if you're an insurance company, that's huge, right? So suddenly you are fixing your biggest problem by lowering your loss ratio. You're fixing your customer's biggest problem by digitizing the experience and funding that loan instantly, right? And all you did is add a bank account and a card and manage some back-end settlement and fund flows, right? But that's what I mean in that context of how do you take an account and a card and those basic components of storing and moving money and build something that solves the fundamental problem in the industry, right? So if you take that and you look at lending, for example, or BNPL, BNPL is interesting because it's really hot right now, right? BNPL, as you know, right, is this model in which these companies have all these relationships with these merchants, are basically getting like pseudo advertising dollars to give back as benefit and can attribute the transaction so that they're sort of more appealing than traditional advertising, right? Well, the problem with BNPL platforms is if I'm not buying it at a merchant that you've already set up for BNPL, you can't really use your service, right? And as BNPL starts to become this big thing and compete against credit cards, utility is a really important piece of that equation, right? And so if you add this, like storage and funds transfer mechanism through the account and the card, and you integrate it with the BNPL solution, you have something similar to what the Affirms and whatnot of the world are trying to start doing, right? Which is a general purpose card, right? Where you can do the traditional BNPL, or you can buy anything in for, right? Because ultimately, it's a payment mechanism.
Transaction, right?
Totally, right? And so in this context, it's like, okay, how do I increase engagement? How do I increase utility, right? And so we don't have to go through every single example here, but that's kind of how some of these newer industries are starting to look at those problems and say, I've seen payroll and PFM and wealth management and all those guys do it. What can we do with it? But I think the even less intuitive one is what happens when you leave this orbit of finance, right? What happens when you go into technology and brands? And I think we're starting to see players across marketplaces, right? So there's a lot of these 2-sided or 3-sided marketplaces that have popped up in the last few years. We're seeing a lot of I would say brands, right? People who have built large customer bases with some degree of loyalty. And we're also seeing retailers, right? Who have actually been on the co-branded card side of the fence, right? They've been on the reward side of the fence, but today they kind of have all of these fragmented pieces. In the marketplace example, today, those entities are reliant on the traditional rails, right? They're reliant on accepting payments from all these different places. Imagine if you can create a closed ecosystem where you're both supporting the people who are selling on your platform. So if you're Airbnb, the people who are renting their places, you're supporting them, helping them get their payments, helping them cash out early, helping them get discounts on things that they're buying to replenish their home. Mm-hmm. And then if you're a user, like me, right, who's going on road trips and renting out these places, you're getting discounts, you're getting benefits, you're getting targeted, places that you might actually find interesting based off of your existing history. And Airbnb sitting in between is solving problems on both sides, monetizing both sides, and then making the interactions between those parties seamless. So you look at that in marketplaces, or you look at brands trying to launch financial services to solve more problems and increase that engagement that they're really looking for. Or you look over at retailers and you realize, something like the Target Red Card is only built on prepaid and ACH because that's what was available, right? And if you move it off of ACH onto this new banking as a service model, you can lower fraud, you can increase capabilities, you can increase utility, you can let them use it elsewhere, right? So what's the theme? We just talked about like 6 different use cases, right? What are we trying to say? All of these different verticals, whether financial, technology, brands, whatever, are reliant on traditional ways of storing, moving money, right? And accessing that data and applying controls. And by modernizing how those components work and reimagining how that core product works with the addition of that banking product, you start to make something really different. So I think that's what's exciting about where we're headed, is how these new industries are going to evolve and become more than just something that added a bank account.
Yeah, I totally get that. That's the exciting part for me too, and particularly in our coverage. Ahon, I want to ask you something, and a question just came in from the audience. I'll tie it together. I guess you mentioned earlier that more platforms are popping up. Certainly, we've seen that, and this event is testament to that. So, how are platforms differentiating themselves, I guess, to potential customers? We had a question come through from Simon Torrance. Said, "Do you see the brand side increasingly wanting a single point of contact to manage a set of solutions, embedded solutions, instead of just looking at multiple vendors?"
That is a great question. So I will first answer your differentiation one, then I'll answer that one. On differentiation, it's in a few areas, right? One is on what kind of customer are you serving? And this is from the platform perspective, not the fintech technology perspective. There are those, especially a lot of the ones that have come out recently, that are focusing on smaller companies that are trying to launch this for the first time, right? And that's a problem set. And so you're seeing there companies like the Units and the Moves and whatnot that are building scalable solutions for people who are just getting started to build these products. Mm-hmm. On the other side, you have people that are going after really large enterprise style clients, right? Like Q2, for example, who is working with the Credit Karmas of the world and what have you, right? And the things that someone at scale needs to operate a multi-million user program, and the things that someone who's just getting started needs, are actually pretty different, even if the core functionality is the same when it comes to business model, how they're consuming it, what their fraud management needs are, control needs are, et cetera, right? So one area that people are differentiating is who they solve for. The second area that they're differentiating is how their technology works. So Q2, we have a proprietary cloud-based technology. Some providers have their own prepaid processor. Some providers, are middleware technology, but each of those have pros and cons depending on where you sit. And then I think you're seeing platforms find their niche, right? Find their area. Like for Q2, that's really personalization, right? So how do we build products around an individual instead of saying, hey, there's product A or product B, put them into the categories, call it a day, right? Because there's a lot of context and nuance that's lost there, right? And so we focus on personalization, on flexibility, and on scale, right? Because we've realized that in owning our own core, that's where we're able to help these large clients build unique things, right? As they go out into the market. Now, to the question that was asked by Simon, right? It's a very good question. I would say the high level answer to your question is yes. People are looking for a one-stop shop when they are brands, so that when it comes to the diligence that their company has to do, it's simpler. When it comes to the operations, they're hedging their execution risk. When it comes to building the product that they've never built before, they have expertise that comes in. The nuance that I would add to that answer, though, is that I think some brands realize that aspects of that equation are more important to do yourself than the savings that you will get by having one associated party. So meaning, yes, I can hire someone to build my UI UX, but if mine looks the same as every single other person, to that first point of what makes people successful, how am I going to differentiate, right? So there's some things that are worth taking on. And the second thing is, within the universe of everything you need to launch banking products, and you think of the stuff, the core stuff like, ledgering, accounts, cards, payments, all that stuff, but you also think of ancillary things like KYC, like fraud management, right? AML, BSA, what have you. There are companies now that focus on doing these things really well, right? And I think what companies are realizing is I don't want one company that's built everything horizontally, because chances are they're not the best at any of them. I want someone that's built the core part the best and that's figured out who the best of breed vendors are. So my offering is best in class. And as they keep getting better or new vendors come in, I'm future proofed, right? So the short answer is yes, they want one point of contact and to simplify all of what's coming in, but there's some pieces worth doing yourself. And even if it's through that same one point of contact, there's value in having those specified vendors tackle parts of that problem.
That makes a lot of sense to me. We're running short on time. We have time for one last question. I want to kind of put this all into perspective. Given everything we've talked about today, like, let's look out into the future. What does this imply, I guess, for the future of financial services?
Yeah, I think that's a really good question. And it kind of ties back to what we talked about in the beginning, right? Mm-hmm. Which is that 10 years ago, consumers were cost of deposits for banks, right? The options you had were digital, yes, but generally one size fits all, or you might see like a silver and a gold, right? Mm-hmm. From a consumer perspective, there are a bunch of people that are either not served well by that existing structure. So gig workers, for example, most banks don't understand gig workers' income or how they go and manage their finances. And so gig workers kind of get overlooked. The underserved population, where they weren't profitable for most banks because of the fact that they have low deposits, are now profitable, right? And so the first big change that you'll start to see is that these underserved or unserved demographics that have existed will start to have products that are built for them, which I think is super, super exciting, because those are the people that have been kept out of the financial system and that are losing percentage of each paycheck just because of the fact that the business model hadn't caught up quite yet, right? So really excited about that. The second one, and I think at Q2, this is one of our big calling cards. We need to move past a world where we conform people to products, right? Within a demographic, everyone is not the same, right? Mm. And the magic about these tech companies and these fintechs building these products is they already had a relationship with you, right? They already understood things about you. So for example, if you're Airbnb, right, you know who's been, renting this person's house, what their reviews are like, how long they've been on Airbnb. So you may have someone, for example, who's been hosting on Airbnb for 5 years, right? But the bank sees that as super volatile income, right? That they're not necessarily willing to acknowledge. Well, you can use that context and personalize the product for that underlying individual because you know something, and that gives you a competitive advantage, right? And today we're seeing the beginnings of that, right? Where at Q2, we're designing out personalized controls that will let people conform every aspect of the product to the person, whether it's the controls or the hooks or the limits or what have you. And that has all kinds of implications. But over time, I'm really excited to see how this is going to impact things like credit, right? How do you consider more than just a credit score? Or, bigger loans, right? As you look at mortgages, as you look at car loans, et cetera, how can we use context and bring empathy into banking to bring this new human-centric world of finance that these tech companies, fintech companies, et cetera, built their business on, right? So I think net, more people are getting served. You're going to get products that align a lot closer to you, and we're going to create a financial system that's a lot more empathetic and considers the context that it has about you.
That's a great vision. Ahon, always great to talk to you.
Yeah, man, this is awesome.
Yeah. So thanks for joining the Big Bang Theory. Hopefully, I got a lot out of this, so I appreciate your participation.
Back at you. I'll be quietly listening on the next chats, but have a great rest of the conference, man. It was awesome catching up.